Welcome to Kim Vietnam's monthly market report for May 2025. Market movements. Vietnam's stock market had an exceptional month in May, rallying strongly with almost no pullbacks. The VN Index rose by 8.67% month-on-month, its best monthly performance in 5 years, fully recovering April's losses tied to tariff concerns. This pushed the year-to-date return up to 5.2%. Investor sentiments improved as trade tensions with the United States began to ease following the reopening of negotiations. More importantly, optimism grew around Vietnam's renewed reform push, especially if forced to empower the private sector. Large domestic groups like Vingroup, Thakor Group, and Chilex Group led the rally, backed by improved fundamentals and clearer strategic direction. Despite the sharp rebound, market liquidity remained steady. Average daily trading value in May reached around $834 million, down 7.95% from April and 2.57% lower year-on-year. This likely reflects a cautious wait-and-see stance from some investors and sector rotation. Foreign investor flows also shifted after net selling about $512 million in April. Foreign institutions returned as modest net buyers, bringing in $37 million in May, a sign of stabilizing foreign interests as macro and policy conditions improve. Sector performance. Every sector posted gains in May, but results varied widely. Only real estate and industrials managed to outperform the VN Index. Real estate surged by 28.9% month-on-month, making it the top-performing sector. The rally was led by Vingroup-related stocks, with further support from developers like Nam Long, Novaland, and Đức Sun Group, which benefited from renewed investor confidence and expectation of policy support. Industrials rose by 11.2% thanks to strong gains in capital goods, especially companies tied to Chilex, and a recovery in the transportation segment, including Vietnam Airlines. In contrast, consumer staple underperformed, rising just 1%, at risk on sentiment push investors toward growth-oriented stocks. Financials select to, up only 4.4% due to weak banking and brokerage performance. The dispersion highlights a selective rotation into pro-growth, reform-driven sectors where structural policy support is gaining momentum. Macro review. Industrial production grew 9.4% year-on-year, maintaining solid momentum from April. The manufacturing sector expanded by 11% in May and 10.8% year-to-date. Retail sales rose by 10.2% year-on-year, slightly below April's pace, with a month-on-month increase of 0.45%. Cumulatively, retail sales are up 9.7% year-to-date. Public investment continued expanding, with May disbursements up 14.6% year-on-year and 17.5% year-to-date. Major infrastructure projects are in progress, including the Lào Cai, Hanoi, Hải Phòng Railway and the North-South Express Railway, valued at $8.3 billion and $67 billion respectively. Foreign direct investment (FDI) shows strong momentum. Disbursements in May total $2.16 billion, up 9.6% year-on-year. Year-to-date total FDI disbursement reached $8.9 billion, while registrations surged to $18.39 billion, a 50.12% increase compared to last year. Trade activity moderated slightly in May after April's strike. Exports rose 16.97% year-on-year, while imports grew 14.1%, resulting in a $600 million surplus for the month and a year-to-date surplus of $4.67 billion. Inflation edged higher, with the consumer price index increasing 3.24% year-on-year compared to the 3.12% in April. This rise was partly due to higher electricity prices starting May 10th. Year-to-date, CPI rose 1.53%. The Vietnamese dong depreciated 2.1% year-to-date, while the US dollar index remained flat in May, but is still down 8.4% year-to-date. Some key policies and events that took place in May 2025 include the Politburo passed Resolution 68, officially recognizing the private sector as the key driver of economic growth. A roadmap is now in place to reduce bureaucracy and open up land and funding access for private firms. The government committed to fully dispersing its $35.5 billion public investment plan, up 22.7% from last year. A task force was launched to establish Vietnam's international financial center, showing strong political will to modernize the financial sector. The gold market is undergoing reform, monopoly production will end, regulated imports will be expanded, and a tax will be introduced to discourage speculation. A new resolution is being prepared to unblock legal bottlenecks affecting around 2,200 stall projects, worth a combined $235 billion. Positive discussions took place between the Ministry of Finance and the U.S. Treasury, addressing concerns about trade balances and custom control. A crypto-assets pilot was announced with new rules and penalties for unregistered investors, positive news for firms participating in this initiative. The average retail electricity price rose 4.8% from May 10. This could impact inflation more fully in June and July. The Ministry of Finance proposed raising export taxes on yellow phosphorus from 5 to 15% and import taxes on polypropylene and polyethylene resin from 0 to 2% to support the domestic semiconductor industry and reduce plastic imports. Market view. While U.S. tariffs risk remain, we continue to see resilience in sectors such as public investments and residential and residential real estate, supported by ongoing infrastructure initiatives and efforts to unlock legal hurdles in the property sector. The private sector, particularly large domestic enterprises, is also gained traction under Resolution 68. Looking ahead, we believe investors should focus on high-quality stocks aligned with structural reform themes, especially those tied to private sector growth and policy-supported sectors, which are best positioned for substantial returns. That concluded the market report for May 2025. Thank you very much for watching. Please stay tuned for more insightful updates from Kim, Vietnam.